Hey, good morning, everybody that joins me live and the ones that are early at 8:30. Thank you so much. Yesterday, SPY range. What did I predict? I told you last 4 Mondays, we trade in about a 3 to 3.5 point range. So once you find the bottom, you can find the top. And once you find the top, you can find the bottom. Helps you trade. So where did we trade yesterday? Well, we went from a high of 429.62 to a low of 426.37. If you do the math, easy subtraction, you're talking about 3.25 points. So 3.25 is directly between 3 and 3.5 points. Volume was pretty decent yesterday. I think it was like 63 million. It started slow. What am I expecting today? Same way I told you yesterday, 3.5 points. I went back to the last 4 weeks. Guess what? Tuesday is eerily similar to Mondays. We generally don't see any movement in the market like last 2 weeks until Wednesday, where we saw a 7 point move and a 5.5 point range. Okay. So again, Tuesday, my expectations, and we'll start off with that 3.5 points, same exactly as yesterday. So as I told Discord yesterday, when the SPY was sitting at 428.65, which is over where we are now, I mentioned volume was light. If we continue to see light volume, the market would fade higher. However, if volume stepped into the market, we would likely go down. So I've got the same thought process going today. If volume remains light, okay, we're likely to fade higher during those times. When volume picks up, it's likely to drop the market. I mentioned 3 stocks yesterday that had pretty significant short interest from hedge funds, big tech. One was Tesla. I said I wouldn't be shorting Tesla. The other was NVIDIA. Again, I personally wouldn't be shorting NVIDIA off that stupid AI play that everybody's going goo and gaga over. And the third one was Meta. And I was like, okay, now Meta I can see pull back. It went from under 200 to 272. It's one of the best performing stocks this year, up over 130%. I could definitely see a pullback in Meta. Okay, so that was number one. Number two, I mentioned a potential squeeze on Affirm Technologies. So those that follow me on Webull, you know when I entered Affirm. So yesterday was my birthday. Yesterday, I had to take my littlest one to the doctor who was having surgery tomorrow, but she's not anymore because she's having the flu. So my trading was limited. But I did, and I was watching Affirm. When Affirm ticked down to $15.15, which was up 3% pre-market or 2.5% pre-market, I said, that's good timing for me. It actually tricked down a little lower, another 8 cents, and then it reversed course. So my small trading account, some of you know I'm in a Webull $25 account that I grew to $100. It closed at 108 yesterday, so it's still doing quite well. And my Robinhood account, which I took from 200 to over 1,400% last week, I took back and I started at $900 this week. What was I caught in overnight? Overnight, I was caught in a Rivian call play. So the fact that I turned green yesterday was quite surprising. As Rivian was spiking to 1462, I tried to get out of the stock. I couldn't. Then it went down to 1440, and I was like, I just got to sell close to the bid, get out of this position, take the loss. It's okay to take the loss when you understand you could be wrong. Rivian went down to 1406 after that, so I did okay getting out. At the same point, that's when I got into my Affirm play. When Affirm went from 1515 to 1585, I exited out. So I made my accounts green on the day. So even when you start out red, please don't give up. And don't be one of those people that says, oh, there's nothing to do today. I'm red. It might go down more. If it goes down more, so what? I don't care. If you're one of those people, then you're not actively trading. If you're one of those people like, yeah, my position is going to get worse today, and you hold the position and you're correct, and instead of like $600, you end the day at 200, you're going to be saying to yourself, God damn, I could have exited at 600. And if I wanted, now that it's worth 200, if I wanted to buy the same shitty position that's only worth $200, I could have bought 3 times as many contracts. I was in for 20 contracts. They were all 30 cents, right? So it's $600. I'm like, nah, I'm not going to sell. It might go down more. It went down to 10 cents. All right. So now it's worth $200. What could I have done? Sold at 30, bought 3 times at 10. And that way, if I was right and it goes back up, I'm up 200% rather than being like break even. Ooh, at least I got out break even. So there's just some plain strategy there. What am I expecting in the market today? I mean, I saw the 6-month rate spike up overnight. It's since settled down. But understand, how do these interest rates affect you? As people are getting better rates on a 6-month investment, a 1-year or a 2-year, even a 5-year, if they're making 5% and they're making 5% or 6% on munis tax-free, guess what? They're going to pull their money out of the market. As Apple shoots up to 180, man, they drop news that they're dropping these visionary goggles, right? 3,500. Then you've got to take insurance on them. Then you've got to take like some other gadgets that go along with them. By the time you're done and in with them, you're in for 4,200. But I thought the consumer is doing great. Shouldn't they be buying these? Well, we'll see how great the consumer is, because I'm assuming consumer credit card is shooting through the roof, over $1 trillion worth of debt. No longer is everybody paying 19%. Now they're paying 28%. So yeah, please hit that like button if you like what I do. I bring good information to the market every day, and I give you a competitive advantage. All right, you listen to Jim Cramer. The dude's like, things are going up. Over the weekend, I think he said how bullish the market was. Yesterday, he mentioned it's time for puts. So, I mean, you're listening to someone that gets paid to do this shit. YouTube is free. I try and steer people over to Discord. Why? Because we use the flows and algorithms, and it gives you even a better competitive advantage, the same advantage that people on Wall Street and work for big hedge funds have. So let's talk about what we're going to talk about today. I just got to check my positions first, as I always do pre-market. First, coin. Coin is down 14% pre-market. Holy shit, Kathy's getting hurt. Why is coin down? Because the SEC is suing coin. Now, that's never a good thing. You had some Twitter people that were being sued by the SEC, and people said it's nothing. When the SEC files a charge against a company, an individual, Martha Stewart, other individuals, they go down. The SEC is not playing around. So, yeah, I happen to think I'm going to curious what all these large institutions are going to do with coin. We're going to get a bounce at some point because someone's going to try and manipulate the stock price up so that they can get out of their position. But holy shit, I mean, I think coin could probably drop to like the 30s. I mean, am I getting involved with coin after it goes down 14%? Probably not. Why? Because I like to trade safe. And unless I have a crystal ball that says coin will be at $32 come Friday, it could be risky because you have institutions that are like, SEC, coin will have you, don't worry. They'll buy and they'll manipulate the price up. I've seen it happen before. All right, breaking news. Chinese authorities, all right, asked the nation's biggest banks to lower their deposit rates, at least for the second time in less than a year. So what the hell does that mean? If the Chinese government is saying to banks, lower deposit rates, meaning you don't have to keep as much money on hand, what does that do? It floods extra money into the economy. So China's trying to save their economy. When people tell you, man, Chinese stocks are good, I'm telling you, watch the F out. I don't want to be invested in China. I'm not even sure I want to be invested in the U.S. at these ridiculous valuations. Whoa, Matt. Yesterday you said we were going to 440 before we pull back. I also said 432 is an option before we pull back to 424. The fact that we're sitting at 426.80 pre-market, we're down a little. Understanding, again, if today is a red day, let's go over the scenarios real quick. Let me just get back to StreamYard. All right. Scenarios for the SPY today. Let's do it here this way. All right, scenarios for the SPY today. Let's go 427.10. We closed at. Let's just call it 427. Let's assume we're going to see a 3.5 point range. Yesterday it was 3.25. Tuesdays usually follow Mondays, so I'm expecting a similar pattern to yesterday. So I'm going to go in yesterday's 5-minute pattern, see what happened. Okay, morning, we got a spike. We rode up for a couple of hours. Then we dropped. We had a significant drop-off volume. So again, if volume increases, I'm telling you the market's going down. If the market's going to fade higher, which it does, I mean, we saw a drop here. There was no volume off that drop. So you have to pay attention to volume. This was a good drop. Then they bought it back quickly. The same people that dropped from this point, when we rebounded, they got out right here again. So they almost got out at 428, which happens to be a dark pool level. So what would I look to reject today? If 428 rejects, say we're at 426.80 pre-market, which we are. If 428 rejects, and I say 428.16 is the high on today, and we're going 3.5 points, let's just say 3.5 points, okay? Then we're going down to 324.50. If we're going down to 324.50 and Tesla's sitting at 217 and the SPY is sitting at 428 and we're about to reject, guess what? Tesla's going down too. So is Apple. So is Meta. So that's how the market works. That's why when you look at the SPY, when you look at the U.S. yield rates, remember the 6-month yield rate spiked overnight. It settled down. But I'll look at the U.S. dollar. U.S. dollar drops, market shoots up. U.S. dollar goes up, market shoots down. It makes our markets more expensive. All right, so let's go over a couple of headlines, see what I got for everybody. Again, if you have any questions on stocks, just ask me on the side. We can look at your stock. We can look at the dark pool level of your stock, and we can see what the action is. All right, so let's go with more news. Here we go. Bum, 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 bum. All right, the VIX. So I got this guy from Alessio. I got to assume, I don't even know what he is. All right. So he's talking about the VIX. The VIX volume suppression has increased the put call ratio from 3 to 2, June 21st expiration. All right. So what was all that nonsense, jabber that Matt just mentioned? It mentioned that people are buying VIX calls. VIX gauges the volatility of the market. They're entering VIX calls with expiration of June 21st. Okay, why is that important? Because as the market continues to fade higher, and we haven't seen any real selling yet, when we see selling, you'll see a drop of 1-2%. Boom, 8 points on the SPY. When you see a drop of 1 or 2, that's just consolidation. It's people selling their position. It's taking profit. It's not like the market's getting ugly or hairy yet. So understand, VIX call volume increased, all right? June 21st expiration. So June 21st is important because what do we have the week before? June 21st gives them an extra week to settle out. So what's going on June 13th and 14th? June 13th, we have the next reading of CPI. Is, their inflation, is the Fed's policy working? Are prices coming down? Are prices going up? So that's what's going on. Then the next day, the Fed is dropping its the interest rate, whether it's going up 0.25%, which people still think is like, not really. They're going to pause. They've said they're going to pause. So what's going to happen when they announce they're going to pause? Remember, it's buy the rumor, sell the news. So what's happening leading into that? People are like, oh, they're going to pause, man. Rates up, go, things are getting better. Things aren't getting better. Look outside your window. Listen to how companies are dealing with things, okay? Credit cards through the roof. Credit card interest rates through the roof. Bitcoin just pulled back. I showed that chart on public Discord a couple days ago. It was a game I played. Guess the chart, and is it bullish or bearish? Somebody finally guessed the chart. It was bearish. What happened? We were at 28,000. Now are we 25,500, 25,700 on Bitcoin, right? So, a short position on coin would have been worked out great. And the fact that SEC is suing coin would have worked out better. But VIX spiking. Why? Because I'm expecting a drop on a sell the news, meaning when the Fed comes out next week and says no rate hike of 25%, you can screenshot this moment right here in time for all of you that are watching. If you like it, give me a thumbs up. But I have a feeling the market's going to tank when the Fed does not raise interest rates. You heard me correctly. The market will tank. The Fed will announce next Wednesday, I believe, that they're not raising interest rates a quarter, and they'll consider it for July. We won't hear the minutes until the following Wednesday. All right, so there was the Bitcoin prediction. Bitcoin prediction come to fruition. Again, I mentioned my 2 positions yesterday. I got out of bad Rivian. I got into a firm. I got into some Chewy puts. Why did I get into Chewy puts? Well, they've been speaking about Chewy puts. People on our Discord, people that are very smart on our Discord. Chewy ran up after earnings. Chewy's now got a valuation. I think it's like $14 or $15 billion. I looked at the charts usually after a spike, and we saw it with Palantir. Palantir spiked to 11, pulled back to like 940, then went forward again. We saw it with Upstart. Upstart spiked on terrible earnings. It was a squeeze. Upstart went from $22 all the way to like $30. Now it's, or $32. It's pulled back to $28 now. So I'm expecting the same thing. Chewy went up. It pulled back a little. Yesterday was an inflow day, so it went a little higher. On a red day or consecutive red days, I'm expecting some selling. Now, what did I do? Instead of going out just till Friday, which gives me today, tomorrow, right? Tuesday, Wednesday, Thursday, Friday, 4 days, I added another 5 days. I'm safer. Why? Because I'm trading a small account. And let's say I'm wrong about Chewy. Let's say Chewy goes to 38 or 39. What will I do? Well, I'll probably buy a couple more options that expire next week, or I'll go out 2 weeks and not only next week. So I'll just add to my position in another way. That's a smart thing to do. Terrible idea. You're in a position, it expires Friday. The market's going against you, whatever position you are. And rather than going out the extra week or the extra 2 weeks, you say to yourself, well, man, these options, I bought them for 40 cents. I'm just going to pay 8 cents now. I'm going to buy 100 of them. Well, there's $800 down the freaking drain. So please trade smart. All right. So again, SPY ranges. I got that. Now, where do I pick my exit point on Chewy? Okay. Here you go. I go back a couple of days after the spike. I find one of the low points on the day, and I say it was $35. The fact that Chewy is trading at $36.80 right now, if I am correct, I already know what exit point I want to achieve. So if it happens today, great. If it happens tomorrow, great. If it happens Friday, great. It doesn't matter to me. $35.09, even if it goes lower, tells me that's my exit strategy with Chewy. I'm going to take profit. So my both small accounts, they're in some positions. I already mentioned not riding a wave. If I see Chewy and I see the market and they're buying the market today, and I'm like, they're buying the Qs, they're buying Apple, they're buying, just for instance, there's no way I'm going to stick in puts that are related to a tech company, a 4-letter company. So please follow the market. Now, I've already told you, I expect the SPY to reject 428. We're sitting where we're sitting pre-market, 426.88. I expect buying to start as soon as the market opens, 428, almost around 9:50 a.m. I'm expecting the market to drop. So what would I do next? Well, same shit I do every morning. I go on to Discord and I look at the top flows, which tell me the most active options that I could be trading. Let me just pull that up. Let me just see if I had anything else. The Chewy puts, right? Chewy. Oh, yeah, Uber. Let's do that first because that was good. Uber call, I was looking for $40. You can't see this. I got out with 268% on my Uber calls. Yesterday, I mentioned I was in a shit Rivian position. Hopefully you guys can see that. Where's my account open up? It opened up nice and down. Did I panic? No, I got out of that shitty position that I tried to get out of up here, and I just missed getting out, which would have been much better. And then I got into a decent position that returned me green for the day. So again, when you're in a bad position, don't worry about it. Again, I was watching coin yesterday at $57. Now it's 14% lower. Talked about the oil cuts. Yeah, none of that other stuff's important. Again, so what am I going to do? Let's go to Discord. All right, so let's see what we got on Discord real quick. All right, these are my trades from yesterday. I mentioned Uber again, 39.80. I got out of my position. Maybe it's a couple days ago. Yeah, I gave my exit point on Chewy. All right, so let's go over to Discord. You've got my room. In my room, I give you a pre-market analysis. You've got the great one, which is Romeo, and he's actually doing a live stream. So let me just tell you when he's doing his live stream. Here we go. Well, nope, it's no 2 p.m. today. So we're doing Wednesday, 10:40 a.m. and 1 p.m. So twice tomorrow and once on Friday. And Friday's live streams are pretty good. He's also got a couple more rooms here. So let's just go up. Let's go to the Flow and Algos room, which is my favorite room, because this room is the same thing big institutions use. Let me just make sure it's on with you guys. Okay, perfect. Understand, big institutions are using the same heat maps. They're using the same dark pool levels. They're using the same top flow to figure out what the most active options are today. So let's look at top flow from yesterday. And what are we looking at? We're looking at Shop, which I saw yesterday. Shop was up 2.5 points or 2.5% this morning. I'm more of a bear, so understand these are all bullish positions. I would be looking more at maybe Apple, trading Apple. I've heard mixed reviews on Disney. Disney had some crazy buying yesterday. If anybody was watching Disney, I've also heard Tesla can potentially pull back 4%, whereas I thought Tesla could run to 232. So there are two options when I attack the market each day. I've got my bull case. My bull case is I'm going to watch Tesla. If they're buying Tesla up to 232 or 225, then I know the market's obviously strong. You're talking about another 3-4% move. If Tesla's dropping and I think it's going sub 200, and again, I'm not talking about today, I'm talking about end of the week, then again, I'm going to be more bearish on the market. There are certain things that we do there. Okay, so next, after the dark pool, I'm going to look at the, where are we? Here we go. I want to look at the net flows. So let me look at the net flow for the SPY, and we'll go like 3 and 7. So we go out a couple of days to take kind of the averages. Let's see what we got here right there. Let's see the net flow for the market as well. Let's just get that and see what we got. All right, so we got the SPY first. Again, we used the 3-7, which tells us a little more information. What do we see right at the end? Huge spike in net premiums on calls. So what am I going to do? I'm going to watch this because I'm going to use the GEX levels to see if maybe the market's going to be pulled. Again, what do you see? End of day, huge spike on the calls. Puts are going up. Yep, we're past 0. So the premiums for puts are definitely net. Again, calls are pretty low. And again, that's got to be a little bearish for me on the market. So I'm going to look at the dark pool level for the SPY. Now, the dark pool level usually usually shows us support or resistance. So where are we looking? Okay, now we have ghost zones. Okay, I mentioned possible pullback to 424. Understand, if the market turns bearish, what this is showing you right now, if the market somehow gets ugly one of these days, whether it's Tuesday, Wednesday, Thursday, I don't care. If the market's bearish, we're going to see 421. You're looking at these dark pool levels, and there's no influx. 25 billion, 26 billion, 13 billion, 21 billion. We're so far away from those support or resistance levels that it tells me we're in these ghost zones. So you see this 428.84. So what I'm telling you is if you see the market rejecting 428.84, $429, then you want to open up the GEX levels. If the GEX levels are telling you the market's going to be magnetically drawn to one of these lower levels, then I'm telling you, yeah, one of these days it's going to get ugly. Again, I'm a bear, so it makes me smile to say these things, but I'm not saying it's going to happen today. So please be cautious. But I am giving you fair warning that one of these days of this week, so we're Tuesday, Wednesday, Thursday, Friday, screenshot this. I mean, I hate to do it against this bullish run in this market, but it looks like 421 is going to be in play. And now that I've acknowledged that to myself, right, how do I actually trade off that information? I say to myself, okay, 421's in play later on this week. I don't need to buy 421 puts because 421 would be, the furthest stretch and it could bounce off that level. So I'd say, okay, maybe 423 is in play, right? Because I don't have to go all the way to 421. So I say 423 is in play, which means the 425 puts might be a good play for me because I know there'll be at least $2, possibly $4 if I held them all the way to expiration and I'm correct. And then I would say, okay, well, we're Tuesday. I don't want to buy today's option saying the market's going to go down because we're fighting an uptrend battle. Anytime we see a good spike in volume, the market goes down. But until that happens, we're fading higher off the disillusioned people out there. So again, I want to give myself enough time to be right. I'll even look at that position. Why not? I'm talking about it. I'm curious about it right now. So I'm going to go to the SPY. Some of you like to trade SPX. That's cool. The SPY basically even right now, 426.80. So we're down 30 cents, which is like 0.06%. So again, options, I want to go out a few days. I'll go out to the 9th. Let's just see where the 9th is. Let's go into puts. And let's go to the 425 again, because 421 or 423 is possible. 425 looks like it's $1.13. $1.13 is still kind of expensive for me. So what I would say is, well, if the market's going to get bought up on open, I'm going to find the top of the market today. Then I'm going to go out to the 425 puts that expire on Friday. And maybe, just maybe, I get them at a discount of 30% where they are now. Now, again, if I'm looking for 425, we go to 423. They're worth $2. 421 would be worth $4. You got the time added in. So again, that's just a trading strategy, and I only base that on the dark pool levels. So real quick, let's say my account is $1,000. How would I trade this position? I might trade one contract at first and possibly a second contract, meaning I might enter in at like $1.02, and then if it goes down to that 90-cent level, I might buy another one. So I might be in for like two at like 95. Meaning $190 total. I have $1,000. It's 20%, even 19% of my account. What if I'm wrong? Well, if I'm wrong, then I know I have limited downside, limited risk. I'm in for $190 max. If I go my full account into puts and I'm like, I'm just going to sell in the first spike, then that doesn't give me an option to hold through Friday to see if my strategy is correct. Because if my strategy is correct, I'm going to return at least 100%, possibly up to 300%. Right? So have your strategy, know what your entry is. Again, my entry would be when it rejects today. What would I be looking at? I'd look at the dark pool level and I'd say, okay, 428.84 is a dark pool level. So right around 429 plus or minus 20 cents. That's what I'd look for rejection. So if I'm saying rejection could possibly be, let's just say 428.84, let's call the dark pool level exactly as it is. And I say we're going to see 3.5 points range today and 428.84. So I go down 3 points. 425, then I go down a half a point, so 425.34. So that's what I'm looking for the bottom side today. 425.34, top side 428.84. Let's say we break higher. Let's say we touch 430 and then reject. Well, how does that change my plan? 430 we reject. Again, I'm looking at volume, and then I see 3.5 points lower, takes us back to 426.50. So again, if you're in a position and you're getting hurt, your inputs, you don't necessarily have to scare sell. I've shown you guys a number of my pictures, which start out, my accounts are down 40%. Overnight, I must pick the wrong positions every time. I'm like, holy shit. Okay, so here was my $900 account yesterday. It was down $270 or something like that, 30% at 10:30 in the morning. Again, where did we end up? We ended up green on the day. Why? Because you have to understand whatever your strategy is. If you're scare selling in the market, which, man, I used to be guilty. I used to see, here's a quick story and maybe a lesson. I used to see my position. I'll just make up a name. I'm in Tesla calls, and I see Tesla off 2% pre-market or something like that, and I'm in calls. I used to say, okay, what's the minimum loss I'm willing to take? And then I used to figure out where I might get a quick spike on market open. I'd be like, all right, I'm out 15% loss. And then later in the day, Tesla finally spikes, and I'm like, that 15% loss, if I just waited, would have been a 30% gain. And I want to re-enter Tesla. I'm like, oh shit, I want to re-enter. But how could you re-enter after taking a 15% loss, even if you're right? Because let's say you re-enter, then it goes down. Now you took a 15% loss, use a day trade, and it went further down. All right, so if I want to look at the dark pools, yes, if you have any questions on that side, that's where you ask the questions. So dark pool level. All right, let's pull it up. All right, so we go to Discord, dark pool for Unity. I will close that out. I'll look at someone's looking at the GEX levels, which I'm going to go right back to in a second. Dark pool levels with an S, and I believe it's Unity software, right? And I heard Unity bounced hard off the Apple news. So what are you going to see? You're going to see all the levels are down here. These are all ghost zones. The fact that Unity bounced up like $5 or probably like 12 or 13%, boom. And there was a guy, Mance, a guy I follow on Twitter. He called it. And again, all he did is do his homework. All he did is do a little research. So here are your levels that you can see. Again, I'm not going to call out every level. What you can see is they go up by about $1.25 each level. That's an easy way to tell. Look, 31.18, $1.25. 32.43, $1.25. This is $1.26, $1.25. So even if you don't have the dark pool levels and they don't go far enough or high enough for you guys, you can understand. Just do simple math. Use a dark pool level. With that said, I wouldn't be bearish on Unity. I just spoke about companies getting ripped on some news, then drawing back. There are other companies that I'd be more worried about. Again, any crypto-related companies. I mean, let's see where Riot and Mara are. The fact that Coin got sued. I don't have those on my list because I don't trade those. I know that Coin moves a certain way, so I have those on my list. All right, so Riot is down 5.5%. I'm assuming Mara's down probably the same. They're following crypto. They're not worried about that Coinbase. Okay, Mara's only down 1.74%. So what does this tell you right now? It'll tell you that either Mara is going to drop down 5%, which is another 3% move, or Riot, which is down 5.5%, is going to work its way up, only down 1.5%. So that's a 4% move. I don't know which is right. Either Mara's going to drop more or Riot's going to come up, but there's a discrepancy, an arbitrage to be had there. Okay, where do you find dark pool? I can't find it on Google. Yeah, I mean, we use Discord. So we use subscribe to Trading Tick service, which is for all of our members, whereas Trading Ticks will provide you the same shit we do, and he probably charges $100 a month. I think we charge like $35 a month. You have my updates. You have Romeo's live trading. You have Trader Chat. So anybody that's not on a Discord, anybody that's an active trader that likes information from other traders, not like these message boards where like, dude, you like this stock, you're such a tool. You're an idiot. What a clown. If you want real commentary on like, hey, man, it's breaking out of the channel to the upside, or they could see some resistance, or I've heard they're doing an offering that's going to come out later in the week. Whatever these stories are, we're here to help each other trade. That's what we do. So what do we do on our Discord? We use all the big bank and big money information. So again, here's your dark pool level. Now, when I mention dark pool, understand over 50% of the market's activity. Let's say $1 trillion is traded in one day. If there's $1 trillion traded in the market, that means there's $1 trillion traded in the dark pool. Dark pool levels have come up to about 50%, if not a little more, than the actual trading that takes place in the day. So when you hear me talking about, oh my God, the levels of the SPY are down, volume's down, it's not trading very strong today. That's because all the freaking trading is happening off market to fool us, the retail traders. Okay. I used to work for the institutions. I used to work for the hedge funds. Dark pool wasn't, I don't even know if it was around then. I don't think I used it. I mean, I traded options. I manipulated stocks. There was pre-market activity. We were trading by 1/8 of a point. It's not like fractions today where it's like $9, $9.01. It used to go up by 12.5 cents, which is 1/8 of a point. So let me just see what else is on my watch list. Again, yesterday I mentioned a firm that I was looking at. Just because it was spiking pre-market doesn't mean I'm chasing the spiking. I waited for the bottom. I got in and I wrote up top. Oh my God, Coinbase is off 18%, down to $48. Again, what's likely? Coinbase will likely get some pop it open, but I could definitely see it in a couple days if this lawsuit is real by the SEC and the SEC doesn't just sue anybody. Coinbase is probably going up to $30. I mean, Kathy's stuck at an 18% loss right now. Let's remember, it rebounded. It was down 16%. Then all of a sudden, it was only down 12%. Now you're down 17%. So, I mean, yeah. Disney has had some support. So I'm interested. If you saw Disney yesterday, there was a crazy, crazy spike at like 3 p.m. Did you guys see that? That's Disney at 3 p.m. That's an institution buying in. Guess what? Just because they bought in doesn't mean that's support. So Disney's probably, in my scenario, at $91, probably coming down to $90 again, maybe even sub 90. So that would tell me, okay, the Dow could be beaten up. If the Dow is beaten up, then I'm going to look at the SPY. I'm going to look at you. So I'm a bear. I'm not going to lie. I'm seeing some stocks, Lee up 2%, AMD is up 0.6%, NVIDIA is down 0.5%. So what's the true case? If NVIDIA is down 0.5%, AMD is up 0.5%, they will run together. So yeah, I'm just curious. And then Palantir, which is up 1% pre-market, that'll go negative. That will pull back to this line right here. If the market is bloody and red and off 100, 150 points, which is possible, you can see Palantir go back and lose that last spike off yesterday, which brings us to the $14.40 level, off 80 cents, which would be what? 7%? No, that's too much. 5.8%, 5.75%, 5.75. Okay, that's close enough. Again, I'm watching Tesla. Tesla, what do we see? We're seeing inflow. What was yesterday? Outflow. Tesla sort of leveled off. I'm looking for consecutive days. We haven't seen consecutive outflow days in Tesla for a while, dating back over here, which was, I'm looking at the 1 month charts. You're talking about like May 16th. We're already at June 7th. I mean, we used to see consecutive outflow days on Tesla all the time. All right. So watching Tesla, heading over to Discord, going to do a pre-market video, give specific levels on the SPY where you know where there's support, resistance. Join me over there. Everybody have a wonderful day.